Good afternoon, everybody. Going to go over our Forex trades for today, Thursday, February 18th. We had 4 trades, pulled out 17.5 pips on a size-adjusted basis. Non-size adjusted, it's about 108 pips. It was 2 correlation trades, which we liquidated. First, just want to talk about the economic news. This morning, initial jobless claims came out, 262,000 versus 275,000. So it's actually better than expected, although initial jobless claims, the government is telling us with that number that it's plunging to near 43-year lows. Absolutely impossible, right? I mean, come on. We know unemployment is really not 4.9% what they're telling us. We know it's much higher than that. We know that they don't pay once someone runs out of their unemployment benefits and their extensions, they're no longer allowed to receive unemployment benefits. The government no longer counts them as looking for a job. This morning, it gets even better. They tell us that initial jobless claims are near 43-year lows. They want us to believe that the job market is one of the best job markets in the past 43 years. I've heard it all. I've absolutely heard it all. Philly Fed came out with a negative 2.8 reading. That's up from a negative 3.5 reading, despite every single component printing lower. So here, the government's Philly Fed, which is actually a manufacturing indicator, went up, right, for the month of January from the month of December, even though it's a negative 2.8, which is not great, obviously, it's negative. But it's better than the month before of negative 3.5, right? But yet, in their makeup of that Philly Fed manufacturing, every single component was lower in January than December. How could it have been a better number in January than December? Again, absolutely impossible. And again, I've heard it all. I think that might be really it. Oh, one other thing. China in the first 2 months, well, not that February is over yet, but if they keep creating the debt for the remainder of February at the pace that they've been creating debt, which in China, it's a communistic country, it's fueled by the government. They will be on pace for creating $1 trillion in debt for the first 2 months of 2016. Never been done before in the history of China, never been done before in the history of America, never been done before on the history of the planet. So to me, it signals that China is doubling down. I mean, we know that they have a massive problem with debt in China, and it could potentially implode at any minute, right? From things I'm reading, it's about 4 times as large as the debt crisis that we experienced back in 2008 during the financial crisis here in the States. So how much, if it is, and this is coming from research reports from some pretty big institutions, they're saying 4 times, some are saying 5 times as big. Okay, we don't really know because China's kind of shady with their numbers, and we also don't know how much of that debt crisis will actually impact the rest of the world. I guess we'll find out if it ever does implode. But here they are. They've just if they continue at this pace for the rest of February, they will have added $1 trillion in debt in the first 2 months of 2016. So again, like I said, it's signaling to me that they're doubling down on their strategy of just creating massive amount of debt to fuel their economy, and they're trying to stimulate their economy. So let's knock on wood, that it works for the guys. I have a funny feeling that it might work short term, but in the long term, I don't think it's going to work. But who knows? We'll see what happens. So let's go over the 2 correlation trades. This one, the first one you're looking at, was a correlation trade between the New Zealand dollar, the Kiwi, versus the Australian dollar to US dollar. Okay, so we were long New Zealand dollar, US dollar 0.66280, and we got out this morning 0.66601, picking up 32.1 pips. We had 20% of our normal size, so adjusted for size 6.4. That was correlated with the Australian dollar to US dollar, which we were short 0.71606, and we covered that this morning, 0.71658 for a loss of 5.2 pips, or adjusted for size 1.1. Moving on to the second correlation trade was pound yen correlated with the US dollar to Japanese yen. And you'll see what happened here. Pound yen, we were long from 162.701. We sold that this morning 163.480 for 77.9 pips, or adjusted for size 11.6. This one we had 15% of our normal size. US dollar, Japanese yen, we had 20% of our normal size. Why smaller pound yen than dollar yen? Because pound yen is a more volatile pair than dollar yen. You could have it 75, 65, 60%, or even 50% of your dollar yen position. So therefore, we had 15% of our normal size. Adjusted for size, we picked up the 11.6 pips. And US dollar, Japanese yen, we were short 113.860. Really didn't do much. We ended up covering at the same time that we liquidated the pound yen at 113.828. Actually made a profit there of 3.2 pips, adjusted for size 0.6 pips. So in the end, on a size adjusted basis on those 4 trades, 17.5 pips. On a non-size adjusted basis, it was 108 pips. So we'll take it. Hasn't been a lot of scalping or swing opportunities, at least what we're not getting from our algorithm, but the correlation trades have been there. Granted, sometimes, they take days or weeks, whatever, but they've been there just because of the added volatility. So we will be taking advantage, as hopefully, again, knock on wood, that it continues, and we'll keep looking for them and keep doing them. So that's it. We're going to wrap it up. Have a great rest of your day. If any signals come out, they'll be coming your way. All right, good luck.